Hey guys, welcome back to another video. Today we'll be taking a look at Intel. So as always, starting off with their PE ratio, it's currently at a 9.93, which is always nice to see as a first impression, as you ideally want this to be at 20 or less. Now checking out their dividend yield, it's currently at a 3.03%, which comes out to about 37 cents per share. Now, before we get into the income statement, I want to see what their gross margin and return on invested capital is. Right now, the gross margin is at 55%, which is good because the lowest you want this number to be is 20%. Then with the return on invested capital, it currently says NA, which I don't really know why. My only guess is it's not updated or something, because if the number is negative, they usually still tell you what it is. Getting into the income statement now, I want to start off by looking at the revenue. As of the most recent year, they're bringing in 79 billion, which is up roughly 16 billion from 5 years ago. So this is great to see. It's been nothing but steady growth. Now, checking out their net income, it seems like they've been on a bit of a losing streak recently. It's overall up from 2017, but it's been basically going down every year since then. Now, the last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. And as you can see, it's looking great. They've brought it down to 4.06 billion from 4.7 billion. Moving into the balance sheet now, we're going to start off by looking at their current assets. So their current asset growth looks good, as they brought this up to 57 billion, which is an increase of 96% from 5 years ago. Now, with their current liabilities, on the other hand, as of 2021, they're at 27.46 billion, which is nice to see, as they have about 30 million more current assets than current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's looking decent. In 2021, they had it roughed as it dipped to 9.66 billion though. This doesn't concern me too much because it's only one bad year, and based on its past success, I don't really see them not improving going into the future. In conclusion, Intel has some really good financials. The only thing I want to see them improve on is their net income, as they haven't shown much consistency with it in the past. When it comes to buying the stock, I would try to stick around the $40 to $50 range, which it's at right now. It's been getting beat down over the past year, so in my opinion, I would consider this company a little undervalued. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching, and have a nice day.